We'll get started. Welcome, everyone. Just a few housekeeping things. This webinar is being recorded, so we will post it to social channels and email it out, but on our website, we'll also send it over to First Financial Bank as well for them to use. There is a Q&A down at the bottom, so if you want to ask questions, feel free to do so. We'll answer them throughout, and we'll also answer them at the end if we're not covering them. This is a webinar we do every month. Today, we're lucky enough to have Bobby and Bo from First Financial Bank. We'll be covering numerous topics. There's been some significant updates to the SBA, so they're going to go through those changes because it could be relevant if you're selling or buying or looking to refinance. Then we'll go through some stuff around the current environment, DIR fees, adding services, etc. And then go into how financials and so forth are important to all of this, and some opportunities that this all is going to create for all of you. So I'm Owen Bondurant. I'm a partner at Independent RX. We help people start, buy, sell pharmacies. We do accounting for pharmacies. So I'll pass it over to you, Bo or Bobby. Why don't you go ahead and introduce yourself?
Yeah, thanks, Owen. Bo Garman, First Financial Bank. I'm a loan officer here. Been banking world for a long time. Been in First Financial Bank for a little over 10 years, working primarily with independent pharmacy owners, helping them with all their financing needs, and have enjoyed good relationship with Owen's group for a good while now. So glad to be here. Thanks for having us.
Yeah, thanks, Bo. Yeah, I think Bo and I have known each other for probably all 10 years now. Maybe, yeah, right around then. So that's kind of weird. It's been that long. Bobby?
So Bobby Glaze, First Financial Bank, loan officer specializing in pharmacy. I'm a pharmacist myself. Before coming onto the bank about a year ago, I ran 2 independent pharmacies for almost 10 years in Southern Arkansas. So understand the day-to-day operations of a pharmacy, kind of gives me a different perspective whenever I'm looking at pharmacy deals. And so I've really enjoyed kind of moving from the day-to-day working the bench and background of pharmacy to financing deals, watching people kind of chase their dreams and passion. And definitely, I believe that independent pharmacy is here to stay, and there's a market to be had. So I enjoy kind of investing in entrepreneurs that still find the pharmacy business attractive.
Yeah, thanks you guys. So I guess where we should start was with those updated SBA changes, because it kind of flows into everything else. I don't know. I mean, there's been some significant changes, the biggest changes in a while, right? Yeah, so I don't know if one of you just kind of want to start going through and highlight the major ones that might impact people who are listening.
Sure, I can take that. First of all, let's start with fee schedules. The SBA guarantee fee. So for anything less than $1 million, there's no SBA guarantee fee anymore. So that's obviously an advantage to buyers or borrowers. There still are fees for loan sizes above that, but they are reduced, especially anything less than $2 million. So should provide a good incentive for people looking to need financing and using SBA.
Yeah, and that's significant, right? Because at one point they were 2.5–3% of the loan amount, right?
Yeah, it can get up there. And again, the larger loans are still they're still there, but and just for everybody's knowledge, is if they are there, then it's something that we typically finance in part of the deal. But but to not have those is pretty significant.
Yeah, it is. Yeah.
Another change has been to the equity injection requirement. So in the past, we still, and this is still true, the SBA requires a 10% equity injection And that, it's probably good to know that that's not 10% of a purchase price or a loan amount. It's 10% of a total project cost. So that's going to include any kind of working capital, loan fees, closing costs, but 10%. So there's, still obviously if the buyer has that in cash and they want to bring that, that would satisfy that requirement. No problem. If they don't have that, or they don't want to contribute all their cash, there's some opportunities for the seller to step up and hold a note. In the past, they could finance up to half of that equity injection requirement, but it had to be on full standby, meaning the seller couldn't get any kind of payments of interest or principal for the life of the loan, which was typically 10 years. So it's a pretty tough sell. That has changed. The seller can now finance all of the equity injections, so the full 10%, and it only has to be on standby for 24 months or 2 years. If it's $1 million and we require 100,000, seller could hold a note for $100,000, no payments from the buyer for 2 years, and we've met that, and the buyer could essentially come in with no cash.
Yeah, that's an important thing, Bo. I mean, we see that a lot. In particular, when you have like a PIC or someone who's working the store, maybe has been working there 2 or 3 years and hasn't had enough time to save up, but they know the store, they're the right buyer for the store. In many cases, they can't buy the store and it ends up being sold to someone else and they're out of job. And so that's a huge, I mean, assuming it all cash flows, but
Yeah, right.
that's a huge option to create flexibility for young buyers, basically.
Yeah, it gives us a lot of ways to structure deals to make them work.
Yeah.
And additionally, a lot of the sellers say, well, I don't want to wait 2 years. They can now begin taking interest only payments in that standby period.
Oh, wow.
For that to happen, they can only, finance up to for that to happen, the buyer would have to come up with 25% of that 10%, so a quarter of it.
Yeah, but
and obviously the interest payments would have to be calculated into cash flow and make it make sense.
yeah, but I mean, if the 10% on $1 million deal was 100 grand, now they have to come up with 25 grand. I mean, that's
a lot easier to do.
yeah, especially when you have student debt and if you're a young pharmacist, you may have some student debt and you're getting there.
More importantly, you get up in the $2, $3, $4 million range.
Yeah. Yeah.
$400,000 in liquidity is, we don't
hard.
see it.
Yeah. No, that's
and for
that's
some of
huge.
the sellers, for some of the sellers, this also gives them kind of a tax deferral opportunity as well, depending on what their tax situation is. If you're holding that seller's note rather than getting it all at once.
And from a bank, it shows us that the sellers invested, right? They have some interest to see this new buyer succeed. So that gives us some comfort too. For existing owners, we can now do an expansion. So if you're as long as the business is in the same industry code per SBA, which is probably going to be in the same geographic area, you want to buy or open a new location, that can be seen as an expansion and requires 0 equity injection requirement.
Oh, wow. Okay.
Now, you must have the same ownership structure that you do now. So if you've got 100% owner or 50-50, it doesn't have to be the same. You can start a new company to do whatever project you're going to do, but the ownership structure has to stay the same.
Yeah, that's yeah. I mean, his number one buyer anymore is current owners.
Yeah, that's right.
I mean, so that again, similar to that seller note piece, that gives you flexibility to go out and expand your market share of an area, which is
right.
What any growing business is trying to do.
Sure. Partial buy-ins are now eligible per SBA. I won't get into the weeds of all that today, and there's some things that make it a little more difficult. But in the past, it was a no-go. It was either our borrower had to ultimately own 100% of the business, or it was not eligible. That is not the case anymore. So if somebody that wants to buy in 50%, or they already own 25%, and they want to buy another 25%, that is now eligible.
Yeah, which is also huge. We see that all the time, or we have in the past, and basically just had to tell people couldn't do the deal, or you'd have to self-finance the thing. And again, going back to PICs, okay, hey, you can buy 25 and now you'll buy another 50, or you'll buy 50 and then buy maybe 50 later on. That's a great exit strategy for people.
Lastly, the refinance rules have changed. And we've actually seen a pretty good uptick in doing some of these for people, where it makes sense. And in a lot of cases right now, it's making a lot of sense for people. So in the past, we couldn't not, a SBA loan could not refinance another SBA loan, or if they could, it was very difficult.
Yeah.
A lot of that's changed, so it's much easier now. The only requirement we have to have is that the new loan improves the cash flow for the business by at least 10%. So, generally it's, well, depending on how long the loan's been in place, it's not difficult. What we're seeing a lot of right now, a lot of people have had variable interest rates. So their interest rates have gone up. In fact, some have even doubled. Let's say you got a loan 5 years ago, your payment is now double because your rate's doubled. And so there might be an opportunity to go in there, refinance that, extend it back out over 10 years, re-amortize the deal, cut that payment back, to possibly where it was when you first started. And it really helps people to alleviate some of the stresses of tighter cash flows with the environment we're in now, which we'll talk about in a little bit. And kind of, again, just gives them a little bit of breathing room. And if it gets to the point, we can do it without any prepayment penalty. So if they want to pay early or pay it down, then but it just gives them a little wiggle room month to month right now.
Yeah, I think that's something a lot of people don't understand. I think we're working on a couple with you now where people, like you said, their interest rates doubled, so their payment went from $4,000 to $8,000 on the same loan, and yet they're halfway through it. And so they refinance that thing, and now their interest rate might not change,
Right,
but they went from a 5 years left to now pushing that current loan amount over 10 years. So now their payment went from 4 to 8, now it's dropping down to 5 again. And so, and I'm using kind of small numbers. There are people who have, $3 million loans who do this, and that payment might go from, it was at 20,000, it went up to 40,000, and now it's dropping back down to 25 or something. And so you're really just talking about getting cash flow. And, there's one thing to pay off your debt, and you do want to pay off your debt. But, you got to have, if you have cash flow, cash is king, right? Like that's where everything is. And if you want to take that cash and pay down the loan early, well, then do that. But if you don't have that reserve cash, it's hard to pay off that loan early. I think people need to explore that. If, sometimes you can make it happen, sometimes you can't, but like it's a, you don't get that opportunity very often.
And we can talk a little bit, we're going to talk a little bit later about financials. So, that's where it's going to be important too. It's still got a cash flow on paper.
Yeah.
So having your financials in order will be key to that.
Yeah. No, agreed. Any other major changes? Anything else people need to, those are, the refinance one alone is, listen, I've been doing this for 15 years. Refinancing a loan has never been an option, not only with the SBA, but just in general. Like people, this isn't like mortgages. Businesses don't get refinanced. And so that's a huge thing.
No, I think that pretty much covers up the updates that would be relevant for this group.
Yeah, it was nice that I mean, all the updates that happen are really borrower friendly. The SBA has really made some steps to try to encourage business growth, and we're seeing it's helping the borrower in the end, and that's their ultimate goal.
Yeah, we actually have a couple really good questions related to financing, so I might just go ahead and take those. The first is in regards to refinances. Can the SBA refinance be done to include paying off a seller's a seller note?
Yes, it can.
That seller note has to have had payments made on it for 2 years.
Okay. Yeah, so that could be huge too, because some of those seller notes might be 5 years or whatever, and now they become 10. Because you paid them off.
Just be careful if there was a standby period
Okay,
for 2 years, that's gotta been making payments for 2 years.
so it can't be 2 years old, it has to be payments for 2 years.
That's right.
Okay. So yeah, thanks. And then the other one was, what are the new rules for sellers being able to remain in the pharmacy past 1 year? Has there been a change to that?
There is, and I don't know exactly the ins and outs of it, but there has been a change there, yes.
Okay, so there might be some options.
It's more favorable.
Okay,
I do know that. I can't speak to the
I-
nuts and bolts of it.
I felt like we talked about this a couple months or a month ago or something, and there is some rules around it, like that you have to follow, but there is flexibility to that now. And I would encourage you to, speak, reach back out. These guys can
Yeah, if you
probably get that answer.
just call one of us and we can dig into it.
Okay. I thought I would cover those since we were talking about those changes anyway. So that was thank you. Those were two good questions. Okay, so now that we've gotten through that, I think we want to segue into the kind of current environment. I mean, the big thing that's out there is the current double dip of DIR fees. And we were talking right before this call. I think the number one thing people need to be knowing is that the end is near. So, we had in November, we had retroactive DIR fees. In December, we had retroactive DIR fees. And then January, February, March, we've had a double dip. In addition, unfortunately, Change Healthcare had their issues. So some people have significant dollars where they have not been paid by Change Healthcare. So it is a bit of a storm, but it is coming to an end. The Caremark did extend how long they're not taking as much out at a time. I think they started with 12 weeks or 13 weeks or something, and now they're pushing that time frame out through June. So you're getting less taken out. So we are seeing in April with our accounting clients, we're seeing deposits getting closer to matching sales. Whereas the previous 5 months, they've been significantly lower due to the retroactive fees. So I guess our number one thing is like hang in there because it's almost over. What are you guys seeing? It sounded like you guys have had calls and, what are you seeing or what are your take on that whole environment?
We had a lot of calls on the front end of people that were pre-planning, taking out some additional working capital, trying to set themselves up for success. And we're still having some calls in between. I mean, the biggest issue is if you're in need of quick working capital on our side, SBA is not the quickest. I can't turn it around in a week or 2 weeks. And so for some of those customers, we've had to tell them of, hey, if you've got a local bank you have a good relationship with and can get a line of credit quickly, that may be your best option. A lot of it comes down to, like you said, of looking at the financials, kind of where are we at currently and knowing, hey, if you're scraping by and making it, the light at the end of the tunnel's shining through. Like we can see it. If you can hold on for another month or two, the end's in sight and it's going to get better. And I know that's tough for anybody to hear when you're struggling, but it's, small term. This is going to quickly, hopefully, be over. And not that there's not going to be another hurdle that we have to jump over. in pharmacy. The only constant is change, and that's what we talked about, before we got onto this call, is really staying on top of your numbers, kind of benchmarking yourself against what the national averages are, so that you kind of know where your pharmacy's at and if it's relevant, what the current numbers are.
Yeah, yeah, I know having good, not only financial data, but also, RX data and operational data has been really helpful for us, because we're getting the same calls you are of, I mean, listen, when you have 5 months in a row of no cash flow, like, it freaks you out. And especially when your sales have either stayed even or gone up. You're like, how am I going to make this happen? But, when you can look at that data and go, all right, here's what I sold. Here's what I deposited. Here's what that has looked like historically. Oh, I can see exactly what the DIR fee has been. Like, I can see that number, and it matches up with my historical DIR fees. Like, knowing that data and just seeing exactly what it is, it gives you comfort to know, okay, when this ends, my sales now are going to match, my deposits are going to match my sales. And when I put that to the bottom line, I make money. And so having all of that, information at your fingertip has been, I mean, some clients we've talked to every month and gone back through it, and they're like, okay, I feel better. I just need to, this is how much cash I'm going to drain. I know it's going to happen, but here's when it's going to end. Here's what that's going to look like when I'm done. But not having consistent, and in this case, we needed monthly.
Mm-hmm.
Right,
And
because you're not an annual, because last year wouldn't tell you anything, because up until November, it all looked fine.
Yep. And a lot of the times whenever we get the calls and we ask, okay, do you have current financials? It's either going to be last year's year end that they send us, or even third quarter from 23. And that doesn't help us with the current situation. Can't tell what's going on if I don't have a clear picture. So.
Yeah, no, it's important. So, I mean, just know that it's coming out, and we kind of have a question here around, they're asking us as an accounting company, is the data showing reimbursements have gotten much lower? Is it the same as last year? And our pharmacies just thinking reimbursements are way worse due to it now being at the point of sale. So Express Scripts sucks. I mean, the reimbursement is much lower. It's not good. And like WellCare moved to Express Scripts. So if you're doing a bunch of WellCare, you're seeing a lower reimbursement. So that is just reality. The other insurances, to be honest with you, we've been tracking this and we're seeing a slight improvement compared to last year. But we do get a lot of calls of people going, well, it's just so terrible and it's just dropped so much. But the problem is what this person was saying, is it just because it's at the point of sale? Well, you used to see, your profit at $15 a script at the point of sale, but it wasn't reflecting that DIR fee. And so now you're seeing that, and it's just the real reimbursement. So it looks extreme, but it really is what it was last year. Except for on Express Scripts in particular. I mean, there are, you guys, some that got a little bit worse, some that got significantly better. But we are seeing some improvement, at least this year. Now, who knows what that's going to look like going forward. Yeah, that's kind of what we're seeing. The other thing that we're seeing is GLP-1s. Yeah. We track all of those across all of our clients. So we've got about 125 accounting clients. So it equates to, 20 million lines of dispensing data. The GLP-1s across the board average negative reimbursement. So you are losing money on GLP-1s. unless you're compounding it. But it is killing people. And you should really look at potentially just dropping those, to be honest with you.
And they're expensive.
And they're expensive, so, and they're increasing, so people are going from doing 5 a day to 30 a day. They're $2,000 and they're making a negative reimbursement on it. Like, talk about killing your cash flow. That's almost worse than DIR fees. So, just, take a look at those. So that's kind of what we're seeing currently. We are tracking this and we're looking at the data. I think we'll know more once we get through this double DIR thing and kind of reimbursements flatten out. So that's what we're seeing. But the other thing we're seeing is, the clients that have not really worried about this, they're doing other stuff. So, I mean, Bobby, I think you had some good examples of things that you're seeing, and I'm happy to talk through those too. But, I think the big thing here is, like, this has been a huge, like, kind of event in pharmacy, but there will be another one. Right? I mean, we get these pretty regularly where there's things that happen that, we can't control, just the nature of our business. So, you've got to be doing the things that, can help you weather that. And I mean, Bobby, we were talking before this, some of the stuff that we're seeing people do that, have helped them not really worry about this much.
Yeah, I mean, I think the key, as we said, changes are constant, and the days of putting pills in a bottle and slapping a label on and being able to make money are probably over. It's ancillary services is where the real money is made in pharmacy. And if you're not changing with the times and adding on these new services, one, you're missing out a huge revenue stream. But I mean, that's really where the profit source is. And so we still see pharmacies come across our table that are killing it. I mean, they're making tons of money, but the one consistent thing is they're doing lots of ancillary services. So, and some of this is state specific. Obviously, until pharmacists get provider status, this isn't going to be nationwide, but people that are doing, point of care testing in their pharmacies that have wellness programs set up. And with that wellness programs, they're doing customized OTCs that are high profit margin, diabetic testing. So they're taking A1C, blood sugars, medication adherence packaging that you're charging a cash price to specialize, or blister packing. I mean, there's so many opportunities, and it's state by state, but I guarantee you there's something that you're probably missing out on that could be a really good potential revenue stream. That, one, it's just implementation, but also you're not waiting on a third party to reimburse you with all these cash paying. That's money in your pocket within 24 to 48 hours.
Yeah, I mean, there's provider status and being able to bill for this stuff, but, I don't know about you, Bobby. I mean, we have clients that they're not letting that be a barrier.
No.
And I'll tell you, I can tell you a story of what happened to me. I was at the doctor probably 9 months ago for my annual wellness, and I hadn't had blood taken in a few years, and I needed some kind of shot. And he was like, "Here's a list of pharmacies that can do that for you. We don't do it anymore." And I was like, "What?" And he's like, "Yeah, we got rid of our lab. We don't have time for that stuff. We got another doctor." He's like, I'm booked for the next 4 weeks. We can't do that." And he gave me a list of pharmacies. And so, like, they're pushing, there's a shortage of doctors. There's more people. They need to be seen. All these other ancillary services, they have to go somewhere. There isn't a whole lot of places for them to go.
If anything, COVID taught us the same thing: point of care testing and test and treat. People knew they could go into the doctor's office and get it paid for by their insurance, but how many chose to go to the pharmacy and pay $75? Well, so it was quicker. They were in and out in 5 minutes.
And I asked that same doctor, I said, "Okay, so what do you're that booked and you can't give me a shot or take my blood. I mean, what are you doing when someone calls up and says, I have strep throat? I think I do." He's like, "I tell them to go to the pharmacy and get tested and call me." because he's like, I can't squeeze someone in. And he's like, and if they think they have strep throat, they probably already know they have it. He's like, they're just going to the pharmacy to confirm it. That's it. And he's like, you don't need to come in and see me for that.
Mhm.
And so, I mean, this is literally a blunt conversation I'm having with the doctor. And they just can't, and I know a chief of staff of a big hospital and he can't find doctors, literally can't find them. So like that stuff's gonna have to go somewhere. And people are getting used, like you said, during COVID, they're like, oh, pharmacies can do all this other stuff now. And you guys, this is 98% margin stuff. It's high dollar, very little cost. And you can offer it. So, and I would tell you also compounding, long-term care. Listen, we have clients and including ourselves, we own a long-term care pharmacy. We're picking up homes faster than we can take them on. And we have many clients who are doing the same thing. And it's because the independent can just offer such a better service. They can do it faster. They can be more flexible. Same with the point of care stuff. Like, do you really want to make an appointment with your doctor, wait 3 days, get at a time when it's not convenient for you, or do you just want to drive up the street and hit the pharmacy real quick? You want to hit the pharmacy real quick. It's so much better. So there's just this opportunity that you got to capitalize on. And like Bobby said, we have clients doing millions of dollars in this stuff.
I mean, and I think for years, pharmacists in general, obviously, we're the most accessible healthcare professional. We've given away the apple cart for free. Well, hey, we're finally seeing a lot of these services we figured out now we can charge for them. Take advantage of it. So, I mean, and one, it gives you also any of these services that you're offering. You may have a patient walk in your door that doesn't fill their prescriptions there. Next thing, you've got a new client because you offered a good service.
Yep,
It's just a way to pitch yourself.
it is. And it's also something CVS and Walgreens are advertising that they do meds. But if you can advertise that you have all these other services, it catches people's eye. And also when you go to talk to a doctor, it's like, hey, I fill medications, we do it better. The doctor's like, okay, sure you do. But when you could go, hey, are you struggling to keep up with testing? Are you able to do your A1Cs? Are you able to do all these things? If that doctor can shift that stuff to you, now you've done something different.
Yep.
And now you've created a partnership with that doctor versus, what are you saying to them otherwise?
You have to promote yourself of that you're more than just a pharmacy, you're a full
Right.
wellness center.
Yep.
So,
And this is, I think we're only at the beginning of this. This is going to expand 5 years from now. This is going to look totally, it's going to be, it is going to be pharmacy. And we've got to keep pushing. So not only do you need that just to stay, like, to create profitability, but that is where the business is going and you've got to adapt to it.
yeah, and I saw there's a good question too, Owen, that Jim had asked about Medicare Part D contracts being offered and the losing proposition. And I think this is a service that a lot of pharmacists don't think about. It's not cash, but we're seeing a lot of pharmacists make the push to become insurance agents.
Yeah.
That way they understand the Medicare Part D programs, and you can steer patients into the ones where, hey, we know we're going to be profitable, get them switched off those Humana plans or the Express Script plans that you're losing money, get them onto something where we can all make a living.
Yeah. And then you get paid every year they renew.
Yep.
Yeah, absolutely. We're seeing a ton of them do that. And I mean, the plans better than an insurance agent does in many cases. So you can actually help not only your patient, but help you too.
Mm-hmm.
So no, that's a good point, Bobby. Yeah, we're seeing a lot of that as well. No, that's really good stuff. And I think what we're trying to point out is, like, I don't know about you guys, but I've been hearing this stuff since I was a kid. Like, they've been talking about pharmacies doing this stuff for 25 years. Well, it's happening. And you can either change to do it, or you can probably become irrelevant and have to sell.
And I was just gonna, whether it's pharmacy or any other business, and sometimes it's hard for pharmacists,
Yeah.
but to do it, you've got to ask for the business.
Yeah,
You
you're
mentioned-
right, though.
You mentioned the doctor had his list. Well, I mean, you might be on that list if you go asking, but if you
Yeah.
don't, you're not.
Yeah.
So, like Bobby was saying, I mean, it's out there, but you got to ask for it.
You do have to ask for it. And you need to make patients aware that you do all this. Right? So you can't just fill their meds, like put a bag stuffer in, letting them know all the stuff that you do. And you might go, well, they don't, right now they don't have the flu, but what happens in a year when they do? So I mean, that is asking for the business, right? But you've got to make them aware that these are things that you can do, and you do have to go ask the doctors for business. And the doctors today don't understand how they can collaborate with you.
Yep.
Unless you make them aware and ask them to try it. So yeah. And then you guys, this sounds all scary, but this happens in every business. I always use the example of Apple computers. I mean, listen, in the 80s, they were the #1 seller of desktop computers. Today they sell phones and music. Well, if they kept selling computers only, they'd be out of business. In fact, they almost went bankrupt because of that. They had to change because the market was changing. They had more competition. They had different competition. So that's all that's happening here is the market is shifting and we need to adapt with it. Which, for some people, they're like, oh, I'm not going to go through this, and they're going to sell. But for you buyers, right?
You're in a buyer's
You buyers, this is an opportunity to go get one store, maybe two, add these services and become pretty profitable. And luckily, you have these SBA changes that make that more feasible. Which is, I think, huge.
We still see a lot of stores come across our desk that they're not even doing immunizations yet. There's tons of opportunity out there that you just have to look for it. So
Yeah. Whereas, I mean, we have clients that do 20,000 immunizations. And you make a 50% margin on those in many cases, not all the time, and sometimes you can get employers and stuff to just pay you cash. So, those are the things that you've got to be doing to, weather storms of things that you can't control, like Med D and, reimbursement. And someone brought up the Caremark saying that they're going to match ESI, but you can't control that. But you can control adding these services. So, yeah. And of course, if you've got financial data, that makes all of this feasible. So let's say you are a current owner and you have the opportunity to buy some of these stores that maybe don't want to make those changes and just want to retire and get out. As the buyer, you better have good financials from your store in order for, your store is the first thing you look at, right? Probably, Bo.
Yep. And these expansion loans, a lot of the times you're probably buying a store that is not performing as well as it should be. And as a lender, I'm going to look at your store and see, one, can you run a pharmacy, and is your pharmacy healthy before I let you get a second location?
Yep.
Yeah, we have to say, if you come to us and your financials are showing you're operating at a loss or not servicing your current debt, then yeah, it's very unlikely that we're going to step out there and put you in another one,
Yeah. Yeah. So,
And the flip side of that is you're looking to a turnaround situation, and maybe it doesn't look great for the one you're buying, but you can show historical revenues or abilities to operate efficiently and profitable, then that's going to help you.
right. And yeah, absolutely. Of course it will. And you need to have recent data too. We can't have, we can't get to June and you have no financials for 2024.
Yeah, I mean, you can't say, I want to buy this store, they're doing a 15% gross profit margin, but I'm gonna take them to 20. And then we look at your store and it's doing 15.
Right. Yeah,
So,
we're gonna have recent data of showing you do these things, right? And you as the seller, if we've got any sellers on there, like, listen, they need your financials to know where you sit currently so that they can, work with the buyer to figure out how to do this or not. I can't tell you how often that we're helping a buyer and we're talking to the seller and we can't get financials for 2 years. I mean, we can't buy the thing if we don't have any data, or we get financials that make no sense, right? That have all kinds of stuff in them, or the cost of goods 1 year is 28% and the next year it's 4%, and then and it's like, oh well, I did some tax stuff or whatever. Well, that's nice, but you need to show, we need to see something that we can understand and believe.
speaking of tax stuff for sellers, I mean, I know nobody likes to pay taxes, but if you are preparing to sell, you need to, the value of that store is going to be based on cash flows and profitability. So, keep that in mind when you're trying to hide stuff or not hide stuff, but lessen your tax burden on your tax return.
Yeah, I mean, we're accountants, so we're always trying to help people save money on taxes, but we do need to look at the long-term strategy, because the thing is if you save taxes now and you're doing a bunch of stuff, it can devalue your business when you go to sell it. And so now you've lowered taxes, but now you're getting less money over here. So, and then some of those taxes are just deferring taxes. So then you end up paying them when you sell. So you do need to look at your long-term strategy and go, hey, I'm going to sell in 3 years. Is this the right tax move now that fits in with the 3-year plan? Yeah, it might save me 10 grand a day, but it may actually cost me more in 3 years.
And that's a great conversation to have with independent RX or your accountant, and start planning for that. And so you don't want to, once it's done and it's filed and you've got 3 years on there, then you can't go back. So get out ahead of that.
Yep. Yeah, and that's a lot of the conversation we start having with people. So we have like a lot of questions, so I might try to fire through. We did answer a few of these, but I might try to fire through a couple of them. I see one here that says, do you see reimbursements getting better for GLP-1s, or will they stay the same? I don't see them getting better. No. I know there's a lot of talk about doing that, but the reality is the only way it's going to get better is if people stop filling them and they're not selling them. And so then the manufacturers are going to work with the PBMs to get reimbursement to a point where people will actually fill them. So I don't see them getting better, no. And they're so expensive that the insurance companies don't want to pay for them. So I do not see that getting better. I don't know, either one of you have an opinion on that. Bobby, you might have one.
It's hard to tell, honestly.
Yeah.
It's like looking into a crystal ball. There's really no truth in what it's going to be. It's wait and see.
Yep. Has there been a trend in decreasing of cost of goods? For example, are the wholesalers realizing we're hurting and coming out with better deals? No, I mean, actually, we're seeing them actually go the other way a little bit. What you guys have to remember is, I mean, with all of these changes, it's flowing to the wholesaler too, and they're getting squeezed as well. So, they only have so much room to squeeze, because they have to operate as well. So we're actually kind of seeing it go the other way. I mean, you're seeing it with GLP-1s. They moved them. Most of them are moving off brands to making them specialty items. It's just because they can't afford them. So Unfortunately, no, and that just goes back to our conversation earlier. You got to add these ancillary services. There's a need in the market and it's high margin. Um, so, yeah.
And I think GLP-1s in that situation, obviously if you're on some type of rebate structure where you have to be a
Yep.
certain GCR, you need to be really careful and watch your numbers. And so we've seen a lot of wholesalers doing some GLP-1 carve outs because they've grown so much in the market. Just make sure you're paying attention and staying on top of that you're
Yep.
not realizing your full rebate.
Yeah, we're seeing a lot of that too, Bobby. I mean, if it's not carved out, it kills you, and we need to do that.
Oh, and how are you? I think it may for some people, or at least a lot of people I talk to. How do you have that conversation? I mean, like you mentioned earlier, just don't fill them. It's not that easy.
It isn't
right?
that easy. You're right, Bo. Yep.
But at the same time, it's what needs to be done it's a business decision.
Yep.
How are you coaching people to have that conversation?
Well, it kind of depends on what state they're in. Because in some states, they have PBM laws where you can kind of do whatever you want. So when you have a situation in the state where you can just choose what business you want, I just tell them to be honest with their patients. I mean, we're an independent pharmacy. We have good relationships, and we just tell people, listen, I lose $100 on this. So take it elsewhere. I'll fill everything else. Heck, I'll even go try to pick this thing up for you, but I can't fill it. Now, if you don't have that luxury, typically what I say to people is that you just can't get it. Which is actually partially true because, I mean, it is a shortage, and
if you don't order it, you can't get it.
Exactly. And frankly, it is on the shortage list, so it can be hard to get actually. So in a lot of cases, you just simply can't get it anyways. So yeah, it's an easier said than thing. And as a pharmacist, you're there to help people. And let's be honest, losing weight's one of the best things you can do. But so it's this tug as a pharmacist to go, I'm going to turn down this business when I know it's going to help the person. And it's an easier said than done conversation, but it's not like you're losing $1 here. You're losing hundreds. So, and if you take that times 40, I mean, you won't be able to help other people unless you figure out how to get around that. That was a good question, Bo. Yeah. We have another SBA one. What is the pros and cons on getting another SBA preferred bank to take over your original SBA loan? Do you get more access to working capital?
So
Original.
I'm looking at that question.
Yeah,
So the advantage, as we talked about, would be to re-amortize it, lower your payment. That's first and foremost. I wouldn't, I don't think you'd be able to go back to the original SBA lender and get working capital. We can, I'm doing one right now, refinancing SBA loan and adding working capital to that at that time. So you can do that, but it would have to be all at once. You're not going to want to refinance here and go back to the other because you're going to get into lien positions and things like that. But you would want to do that in one fell swoop, I would think.
Yeah, just go get one loan. Don't go get multiple. Question here is, does your LTC have competition locally? You're probably talking about my store, I assume. Yeah, we got it all. Got a couple independents, we got Remedy, we got Guardian, we got Omnicare. They're just not very good at what they do. So you have the opportunity to go out there and win their business. It's just you got to be in front of them and find ways to, we'll work as a backup at certain ones. We'll do their immunizations. We've found that Guardian and Omnicare will, have been telling, especially medium-sized facilities, hey, we'll ship you the immunizations, you have to give them yourself. Well, I mean, these places can't find nurses. They don't have time to do that. So we just go out and do it. And so now we got our foot in the door and, we build a relationship and we get it going. It's all a service thing. You can just do a better job. That's all. Hospice and billing Medicare or just go cash. Whoever answered that, you may just need to reach out. That's a complicated question. And the answer could be both, depending on the situation. Yeah. Can expansion loan qualify for a different city? That's probably also going to be a kind of a complicated one, right, Bo?
I was just typing a response
Okay.
to that. Yes, it can. The SOP for SBA in typical SBA form says it has to be in the same geographic area. So whatever that means, that's all based on interpretation. So, as long as you're not going from Seattle to Miami, more than likely it would be okay.
Yeah, if it's the next city over or whatever, right?
Oh yeah.
Yeah.
Usually, kind of think about it. If you can drive to it within a half a day or a day, you're probably okay.
Oh, that's great. Yeah, good answer. Let's see. This is an interesting one. The owner of the pharmacy I'm working at wants to pass on the pharmacy to me because he is retiring. He does not want to provide financial statements or data. I'm having problems finding a lender because the lender wants financial statement for the last 3 years. What are my options? Well, seller note, he can finance it himself. But I would caution you from buying something that you don't know the financial state of the business. Listen, this is an investment and you're on the hook. So if you can't pay the wholesaler, guess who they're going to come after? That's going to be you. And that would be awfully risky. So as a buyer of the business, it is not unreasonable to look at financials and the data associated. So I personally, I own several businesses. I wouldn't buy a business unless I know everything about it financially.
One way to maybe bridge that gap, and a lot of people are they like to hold things close to their vest, especially if you're working there and they don't want you to know. You could draft up some sort of and Owen's group could help you with that, but some sort of a non-binding letter of intent, just to say, I'm interested in this. And along with that could be a non-disclosure that I'll take this information and I'll, won't share it anywhere else, but just let them know you're serious. But at the same time, I'm not telling you what to do, but
And I don't know about you
you can't
guys.
buy anything if you don't know what you're buying.
We've also had scenarios where, and this is going to sound odd, where the seller is willing to send us the financials and we sign an NDA with him. We review it and look through everything. And then we get, we ask the questions, blah, 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 and then we do the letter of intent. So that way, and maybe even share it with you guys to get financing in place. Because then he feels better about sharing everything with you because they have financing and an offer that they can accept. So that's other things that we've done. To Bo's point, sometimes they just don't want their employees to know all their financial history. Until which time they're absolutely sure that they can buy it. So that may be another option for you is to, sometimes they're comfortable sharing it with us and, we'll help you get a letter of intent and financing and then we can, eventually you have to see them because you're buying the business, but at least they'll feel a little bit more confident that there's money to buy it.
Well, and I think on the banking side, we always stress of, one, you have to do your due diligence, but also don't get emotional about transactions like this. It's the end of the day, business is business. And I'm sure if you've been the pharmacist in charge, you have an emotional connection to that pharmacy and the patient, but don't put yourself in a bad situation because you didn't do your due diligence.
Yep. Yep.
It's not uncommon for a seller to think their business is worth more than it really is, so.
Yeah. Yeah, and one of the best business decisions you can make is to walk away. Can't tell you how often we've done that. So, but that can be easier said than done due to especially when you're working at the store, the patients, the employees, you may have to switch jobs. Like, I mean, it can be tough, but don't put yourself in a financial position that you need to know what you're getting yourself into. So, I think that's it. Any other parting words here?
I enjoyed the chat today. So thank you for having us on, Owen.
Yeah, likewise. Thanks for taking the time to get on. Oh, this is good.
Always good. Thanks again.
Yeah, likewise. Thank you. Talk to you soon.